Right, okay. Stuff is green, both OBS and the market for a change. Let me know if you can hear me and see something. Feels like it's been a lifetime since we've done a proper Monday Markets video. Bit out of practice, but we'll be fine. I see green, good. I see green, yes. Excellent. They come back when it's bullish again, laughing emoji. I guess they do, Tony. I mean, why wouldn't they, right? If you fall into despair and you really want to like sell and panic and puke and capitulate on and social media has that kind of impact on you, then it might not be a terrible idea to just go away if the market's down too much and then come back when people are a bit more positive. It's not the worst thing in the world. GM, yeah, GM. Okay, let's do this. First things first, get the FTX app. Why? Two reasons. One, they support the show. Two, there are altcoin Ponzi schemes you can buy which are actually going up and could go up for a little longer before your uncle, who's hated crypto his whole life, finally buys the top and then never speaks with you again. Those are the two best reasons. They're good enough for me. They should be good enough for you. Also, normal YouTube stuff like, subscribe, comment, share with a friend. What else? What else is there? That's really it, isn't it? But the channel's been enjoying good growth. Thank you again for your support, comments, all that type of stuff. It really does make a difference. Let's keep it up, I suppose. Duck has too much fun. He's been slacking. He's been having a very good life. Okay, so what has transpired? Number go up. Number go up is good. In the last video we made, we were essentially discussing the fact of this weekly breakout and that it's the first kind of weekly higher high, the first effort at breaking this resistance that's been capping the market for 6, 7, etc. weeks. We also looked at it on the daily time frame, right? Even though it was moving a bit slower at the time, which was fine. As we discussed, it was a weekend. And the argument was you have a fifth test of resistance, especially as support is kind of creeping up. At a certain point, not all, levels don't last forever, right? And at a certain point, these things do roll over. And when they do, you have a lot of positioning, like a very one-sided demand for liquidity happening all at once. Like everyone trying to leave through a narrow door, right? You've got shorts covering in the same spot. The same sellers that were betting on the level holding are all wrong, so they have to close. And we know that shorts closing end up being buys at market. Plus, you have fresh trend and momentum buyers who are happy to jump on, believing that this time is different. And those two things put together give you your squeeze. And typically, the longer the consolidation and the larger the open interest build up within that consolidation and so on, when it finally breaks, unless it's some sort of deviation type of thing, if it's a true breakout, longer consolidations generally lead to longer and bigger expansions. Okay? And that's kind of what we're seeing right now. We had the compression right into the level, big pop, and then second leg / continuation for the time being. Where does that put us? I still think the monthly time frame is kind of the best guide we're going to get. And why don't we do this on a fresh chart? This is me looking at where I posted my capitulation article. Thankfully, it wasn't one of those which says the market hasn't bottomed, it has to go to zero before it bottoms, etc. It was the one where both sides of the volatility spectrum can lead to capitulation. Like, I was bored because I was writing an article, and thankfully that was here, which is quite funny. In any case, in times like these, the monthly time frame is as good as anything. Let's get rid of our booming averages for just a second, and we're left with the following, right? Highest close, range high, lowest close, range low, and the midpoint as the midpoint. Here we go. Yeah. And then we're just going to extend that as well. And what we can do is just draw kind of, take the candle at the high, at the low, and at the midpoint to give us the complete levels, right? So we're going to do this for the range high, this for the range low, and then this for the range midpoint. So that's the monthly. What conclusions can we make from the monthly time frame? What reasonable inferences are available? Well, it looks like support is supporting. This is a good effort to break resistance at the moment, and we're going to talk about what that might look like on the weekly and daily timeframes. Although, as you can tell, already there are just 3 days left before this is quote-unquote confirmed, and then a rather clear target in the form of the range high. I know that it may seem unreasonable, kind of back to 58k, etc., just based on this, but it's a range just like any other, and also the range has been working really bloody well, so I see no reason to discount these levels, even though it's quite a big range in notional terms, right? And just like anything else, the same rules apply even if the time frame is a little bit higher. So what we've essentially had is, you know, range high, range low, and then range midpoint. If we take recent price action, the market's come in, very one-sided move from the range high all the way down to the range low with no bounce at the range midpoint, really. It just kind of cut straight through, hit support, strong bounce, bit of a reaction here, right? Back to support, and now it's having a second go at breaking that level. So it's kind of you are here sort of setup. It's totally plausible that, at least on the higher time frames, just like the range midpoint didn't do much on the way down, that it doesn't do much on the way up as resistance. And that's both sensible or acceptable from a TA point of view, but also, as we've seen from lower time frames, you did have some resistance. There's 4 tests at the midpoint area, and that looks broken until proven otherwise, right? So in any case, just like when you have a range midpoint turn from resistance to support, or when it gets reclaimed, right, where the market is kind of right here, if that is confirmed, solidified, cemented, accepted, whatever term you want to use, your target is generally the range high, which would be a move here, right? That's not too controversial, in my opinion. So levels in a range that matter most: range high and range low. Range midpoint is a trade management area / good to gauge momentum between boundaries. Also, sorry if I sound a bit stuffy. I'm sick again, which is infuriating, but here we are. So essentially, levels in a range that matter the most, as always, the boundaries. That's where you get your clearest signals, clearest trades, most risk-defined setups, so on and so forth. It's also where you expect the biggest reactions, which is kind of important in the context of what we're discussing right now. Range high, important. Range low, important. Range midpoint is kind of the middle coin tossy type of territory. It's more, what does the range midpoint do, having traded at one of the boundaries that gives you useful information. And it's good to gauge momentum between boundaries. So we know that if the range low is being supportive, that's the most important part. And then if the range midpoint breaks, that's the cherry on top to print you the target that you want, okay? So, I mean, we could literally stop here on the monthly time frame and say, you know, assuming a monthly close above 47k / range midpoint, the purely technical trade setup becomes, again, this isn't like a risk reward tool type of thing, but just to give a rough idea, it would be something along the following lines, right? Whatever lower time frame breakout and validation you could find in the 40s, let's just, you know, for the sake of argument, make that 41k or even 40k, doesn't really matter too much, right? The setup would look something like this. And again, it's not the risk reward tool that matters, it's the basic idea that now that the range midpoint has turned from resistance to support, the range high target is in play and the invalidation is losing the breakout, right? That's sort of the inference from the monthly time frame. Does that make sense so far? Okay, cool. Monthly time frame is gas. So you've got to look at this thing. It's really good, especially for BTC. It's slow, yes, but it gives you good levels and pretty clear signals overall. And also, it adds a sense of patience that you might not get from lower time frames. You know, um, John Manova says no very nice risk reward. I mean, not in the way that I displayed it, but if you find the tighter invalidation, it definitely becomes much more attractive. And the whole point was just to kind of showcase where we are in terms of structure more so than anything else. You guys have been talking about this midpoint for a while. Yeah, it's been important for a while. So where does that leave us on the weekly? So same old weekly breakout. Where the market is right now is an area I don't really love because I don't have a super clear read on how to interpret this kind of pre-breakdown area / consolidation. We know the monthly cluster falls somewhere in this area as well. So there is some technical stuff going on. And at the same time, if we look at where our three trend following tools are, they all fall in this high 40s type of area as well. I'd really like the market to be clear of this, not mess, but area of congestion where you've got like, the weekly cluster, the point of prior breakdown. We're currently clear of the moving averages in terms of where the market is right now, at least 2/3 of them. But it's not like a very straightforward breakout. Like it's not the case that it's a clear acceptance at this point. It's kind of trading at the moving averages. So just eye test in terms of where the market is right now. The risk reward of, at least for me, and this is someone who's absolutely anxious and terrible as a breakout trader, the risk reward of jumping on here to me isn't great because we know there's some weekly stuff going on from a technical point of view, and it doesn't look like we're entirely clear of the trend following green lights yet. And considering that there's plenty of upside capture if this turns into the kind of move to the range high. I don't love it right here for a fresh type of momentum trade. That's simply because I don't think the risk reward is amazing, and the invalidation wouldn't be super clear to me either. Just kind of eye test type of stuff. I think that'll age poorly personally, but I have to kind of look at what's in front of me. If you're wondering why that is, there's a technical. Well, the technical reason for that is quite straightforward. I think the only way this market, like basically, the market looks good unless you get screwed on a failed breakout, right? That's literally the one thing you can learn from this video is market stuff looks good because it actually broke out after moving sideways for ages. Fading the break of a long range too early is how you get steamrolled. Note, market can go from looking very good to very bad in a short space of time if failed breakout forms, which would be interpreted as a squeeze or high time frame bear retest. Right? This is what I'm getting at. The market actually broke out. That's good, right? It's positive. You've got weekly shift in market structure, daily shift in market structure. Depending on which of these trend following tools you use, we're above them and closed above them on the weekly, and all that's really positive, right? And the way you get run over, both on the upside and to the downside, especially on the upside in crypto, because shorting, if you don't know what you're doing, God help you. If you fade the break of a long range too early, it's how you get steamrolled, right? So even if, let's say, you're bearish over some time frame and you're correct, and before that the market was consolidating between like two levels, right? It's just chopping here, and you're saying, well, my target is down here because I think this is where fair value is. I think that it's bearish or whatever, and then it breaks that range, and you start selling it. These are my amazing FTX down arrows. You start selling it too early. There's a really high chance that if your timing on that is wrong, you get run over completely by the toxic flow, essentially, or the one-sided move, or the what looks like an early trend, and then eventually maybe you'll be right. It's just if you actioned your idea at an inopportune moment and kind of faded the volatility too early, even if you were ultimately right about your target, you still eat shit because your timing was bad, right? And that's kind of what I mean here. By fading the break of a long range too early is how you get steamrolled. And it works for the downside as well, right? Like you could think Bitcoin is cheap around, the 6K is cheap, for example. And so anything below that is a discount. 6K breaks down and you're buying, 5.5, 5.4, 5.2, as many people did in 2018. You're probably getting carried out, even though your larger time frame idea was correct. So the timing of it is, and having the correct kind of idea of how far a break could go is very important, right? So with all that in mind, with momentum being to the upside, right? I'd say the market can go from looking very good to very bad in a short space of time. This bit is very important, right? So it's kind of one of those good until proven otherwise, but you need to be very aware of what until proven otherwise means. And for me, in this case, it's if failed breakout forms either at these, in this 48-ish area where the market's approaching now, or at the prior breakout level at 44. In any case, if we start to see that same pattern, whereby the market looks like it's clear of levels, but then it isn't accepted much above it, or that's where it stalls, and then ultimately falls below them. This type of stuff would be like very, very much red flag. What is going on? I don't want to hold on to this anymore. This is one of those setups where if it's bullish, it just has to keep going, right? Especially at this point, which is quite early. Like if this is a new trend, this is very early, in my opinion, right? Like if we're talking multi-month, multi-week uptrend with, 60K whatever target, structurally this should be early trend, right? And it should be clean. It shouldn't be having any type of hiccups or stalling or failed breakouts, momentum slowing down. It really shouldn't, right? And therefore, if it does, which is to say failed breakout forms, then you have to start entertaining the idea of bearish patterns. I agree with Duck from the weekly open stream. The only possible exception to that is a kind of a flash crash on an intraday basis that gets bought up at those high time frame levels. I'm talking like a hourly type of complete nuke that then just gets erased and full retraced. That's about the only acceptable thing when it comes to retests of support that I'm willing to stomach. Anything past that starts to look slow or that is running out of steam, I think is really worth guarding against and isn't a good thing. So what does this mean if failed breakout forms? As I mentioned, on the weekly time frame, if we go back to stuff which has actual levels, where are we? I mean, let's just add this cluster here. We know where it comes from anyway. This is weekly, and our monthly mid-range is roughly around there as well, all in the same high 40s area, right? So what would this failed breakout look like? As you can imagine, the idea would be that any push through it / into it is just a high time frame wick. And again, the question is how far does that go, right? If it goes to, what if it, it can go to 50, 52, it doesn't really matter. The idea is the backtest part of it, right? That's where it gets scary, which is to say that if you get your push, but the push isn't accepted and it ends up back below the structure which triggered the additional momentum in the first place, that's when you're fucked / when the market really starts to take a turn. So just as a very crude example of that's not an oil pun for a change. Something like this, but let's do this. Okay, here we are. We're doing fucking arts and crafts with Cred, trying to draw the candlesticks. God help me. Here we go. This is top tier analysis. 5 years in the space, watching market structure evolve, and I'm coloring in candlesticks with my trading screenshot tool software. Fuck my life. Anyway, something like this, right? You get another breakout candle, which kind of confirms the move, if you will, and clears all this clutter and gives additional momentum signals, and then eats shit. And the next candle looks like this, for example. That is vile. But you get the idea, right? This is what a failed breakout would look like. Why? Well, because the push through these levels, the monthly mid-range, all the moving averages, your higher highs, etc., the move through these levels introduces additional trend and momentum longs into the market, and then this would mean they're all wrong and have to close. And on that occasion, it's kind of the reverse of this, whereby a bunch of shorts that are wrong closing end up being market buys. In the same vein, a lot of longs having to close at the same time become a bunch of market sells, and this whole thing just looks like a bearish retest, right? So this is the kind of stuff that would be completely unacceptable. And the same applies for the daily time frame and the kind of 44K breakout or thereabouts. Also, the reason I'm focusing on the quote-unquote bearish scenario or the negative stuff isn't because I'm bearish. It's because that's the only part that's interesting. As I mentioned, stuff looks good because it broke out. Just like in the old video when the market was here, the idea was if it breaks, you know, if it rips, leave it. And then if it deviates, trade it. So the actual quote-unquote trade idea on the positive side, it's not exactly ambiguous or it doesn't need much explanation. Market go up, it's good if it keeps going up. I'm not gonna like harp on about that, right? It's not terribly interesting. I'd much rather spend my time talking about invalidation so that we don't get caught with our pants down if we get rugged by the Fed, legacy, Russia, Ukraine, oil, all this other stuff, right? Hope that makes sense in terms of why I'm focused on this stuff. It's not because I'm like coping or trying to give you bearish arguments while the market's obviously strong. That's not the case. I just think the case for strength is so self-evident. I'm not going to insult your intelligence by harping on about number go up means number go up. And I just want to talk about invalidation and potential pitfalls instead. Does that make sense? I hope it does. In any case, the same type of failed breakout logic would also apply to this massive 44K breakout we discussed, right? This one here. Just like any other range, and just like Bitcoin offered at 58K or 60K, when you get a break of a level, if it comes back within the range, that's generally evidence that whatever this was, the market wasn't willing to accept those higher prices, the breakout failed, so on and so forth. This becomes your deviation, excess, whatever you want to call it, and then you're expecting the price to trade back within the range. So whether it's taking place at 48K, where we've got all our kind of moving averagey midpoint stuff, or whether it's taking place at 44K, any market pattern which offers a thrust of momentum and then gets stuffed, that is bad. In the absence of that, number go up. And as per the old video, what are the targets for number go up? I think there are a couple. Higher time frame, if this is a true flip of the monthly midpoint, and again, that's where these levels come from, right? This is range low, this is midpoint, this is the range high. If this is a true flip of the monthly midpoint, what we're seeing right now, the larger target is the range high at 57, 58K. The initial target or the lower time frame target is this whole area here at 52 to 53K. Why? Well, it's a nice little in-between technical level, which is always nice. So you don't have to hold the whole way without any type of trade management. But also, just, there's like a lot of stuff here, right? You've got the previous swing highs here. It's the last bullish support before market structure got obliterated, and it's a previous high. So there's like a bunch, just like there's a bunch of confluence of resistance here, there's a bunch of confluence at support here. You know, there's a bunch of confluence at the mid-40s. Sometimes you've got the levels stand out, and those are the ones you pay attention to, right? And in terms of targets, assuming number go up and we don't get faked out, range high as the big one, and then 52 to 53K as an intermediate one, because that area is just stacked with important stuff. X marks the spot. TLDR. Breakout good. Failed breakout bad. Pullback good in general, but if it happens too early in new trend post breakout, a bit of a red flag in itself. Best case equals keeps going up. Get the fuck out if failed breakout stuff forms at key levels, 48-ish, 44-ish, decent momentum, TP at low 50s, ultimate target if rip continues at range high 58k. There you go. Breakout good, failed breakout bad. Pullbacks are good in general, but if that happens too early after a breakout, like it would be right now, like if this candle started to retrace anything outside of a very quick flash crash, anything outside of an intraday flash crash that would get gobbled up completely would be garbage. That would be unacceptable if this just started to turn red in the absence of that type of pattern. So the best case is just it keeps going up. Really, that's how kind of crypto works. It's not very forgiving in early trend. But that is the best case for bullishness, is that this is early trend and it's just got to rip. And if you want an entry, boo-hoo, you're going to have to get one later somewhere within this consolidation or something. And that's fine. You know, that's fine. It's just not everyone's comfortable with that idea. Get the fuck out if failed breakout stuff forms at key levels, as mentioned, either at 48-ish, oh my god, or back at 43, yay, oh fuck me, where'd all my money go? That type of stuff is not on. I just lost my summary, you might, whatever. I'm sure you can replay it, even though I can't. Not sure why Cred needs to type out the notes, because it helps some people. That's BTC. That's BTC. ETH. Very similar thing, right? Oh, good. It's got the commentary from last time as well. ETH monthly sucks. It's not a very good chart. Eth Weekly is a much better chart. And the idea is as follows. Just like Bitcoin's got like a bunch of uncomfortable, weird stuff. It's kind of resistance, but it's been weak. But getting freshly long into it is still a bit meh. And you kind of just want momentum to drag you forward. ETH has equivalent levels in the low to mid 3000s. So again, and this is going to be an awkward one because this weekly closed just on top of the extreme of that resistance. So it's one of those, again, which I know sucks, but realistically, the best case is that this weekly doesn't leave much to guesswork and just pushes up towards the range high. And then, if you want an entry, you're going to have to stomach something. You're going to hope that the range high acts as resistance at first. And so you've established a new range. Instead of it being between 2K and 3K, your new consolidation to do business is between 3K and 4K. And so you get something like a push, it finds resistance, pulls back, and then it's within here that you find an entry before either acceptance or its bottom falls out, and that's a very clear cut / invalidation type of thing. I still think the clearest ETH bullish continuation trade is if 4K gets reclaimed, this thing probably gets full sent, at least obviously towards the prior all-time high, but then much higher than that. And the reason I say that is because this fake out was nasty and gave you like a very one-sided move. But in general, as we know, it's very unlikely that you get two fake outs like that. So let's say the market pushes up. Oh, they've done it again. Look, we fell for it. It's a second time. Unbelievable. That kind of stuff is pretty rare. If you get weekly closes or just acceptance back above 4K, I imagine that will give you a really strong push. So in terms of ETH face ripping moves, that's really, I think, where the next one will set up if appropriate. In the interim, this area is still a bit sticky, but ultimately I think unless we full retrace and start to look like total garbage, the new range is going to be between 3K and 4K, and there's plenty to do there, right? And same invalidation type of thing applies. If this move doesn't manage to establish 3K as support and it goes back to being resistance, then we just have to say, look, it was fun, but it looks like a squeeze and we're probably fucked. And it's no longer positive, bullish, constructive, or whatever. But until proven otherwise, and in the absence of a full retrace, TLDR, new range between 3K and 4K, with 4K plus being face ripping move most likely. Anything here, more or less a tradable consolidation. below 3K, the bullish case starts to look garbage, and this starts to look like a squeeze. Okay, and the target for any big nukes, I think, is still the untested range low at 2K. If 3K doesn't really achieve shit. Yeah, that's really it for ETH. Do I want to say something else? Um, no, I don't think so. I think that's it. What do you think? Does that make sense for ETH? Oh, the final point I'd say is, again, just like BTC, the only acceptable setup from a from like, what kind of retrace is acceptable. Again, I think just like we're clearing all these market structure areas, you really just want to see it go. The only thing that would be okay is similar to Bitcoin, like a very quick intraday flash crash that gets bought up immediately. That's the only thing that would be cool. Anything else, I just start to be like, why is it slowing down here? It looks less good than before. The only other level which I remember paying attention to before the 4K range high, if momentum were to slow anywhere, it's, I think, this pre-breakdown, previous highs, lows, like a bunch of confluence at 3600. That's something I'd at least keep on my chart. On the altcoin front, I added some stuff which is called 2022 trendy. If this continues, obviously expect alts to do well as well. And there are two areas where I think that'll manifest. One is people just jumping back into old names to chase strength, which is the classic Sol Luna AVAX. And we've seen them kind of pull ahead of a bunch of other stuff, which is expected. So that's the first area, even though I think generally, structurally, I'm pretty tired of these pairs. But still, the familiarity certainly helps them in this weird kind of mid-cycle spot. And the other one is new stuff, which has fewer bag holders, less chart data, and just has the novelty factor, which is looks to this went through a bit of a roller coaster itself in terms of PR, reputational stuff, or whatever. But if the NFT narrative is going to take a liquid form, I imagine people looking for exposure flock to the OpenSea competitor, which has a token that's tradable. And that doesn't look too terrible from a market structure point of view, right? This is like a pretty big drawdown, and you can just kind of see, eye test type of stuff. You have a strong trend, it starts to bottom, yada yada. You have a break in market structure, a markup, and so on. I'm not saying this is going to look exactly like that, but at least it's showing evidence of some sort of bottom because it's broken market structure since and is pushing, which is nice. And it's also pretty clear in validation. Whereas if if it comes back below the breakout level of the consolidation, what is that, $1.50? Then that it's an idea with a clear invalidation, at least when you're talking about market structure. I haven't bought any of this stuff yet. My altcoin appetite hasn't been triggered quite yet. I'm happy to be late to that kind of stuff if the market keeps pushing or when it starts to consolidate after the next leg happens, whatever that may be. But just some stuff I'm looking at. Sol Luna AVAX, the familiarity longs, and then Stargate. This is like a low cap, and all my friends got super rich buying this kind of thing. I obviously didn't because this is crypto cred, nothing new here. But lots of smart people like this, so it's on my watch list. And then again, in a similar vein to the whole a liquid representation of the NFT sector, ape coin / ape token. Can you imagine if this type of thing came out when the market was red hot? It would be completely ripping, and it's doing pretty well at the moment. So if the tides really shift and we get like a sticky uptrend, I mean, it's even called ape. Forget the fact that it's the Bored Ape coin, right? The fact that it's liquid and called ape and not a total scam, that in itself is about all the FA you need in the appropriate market conditions. So this is something else I'd also look to punt. Ideally, it spends a bit more time in this range and carves out some levels, right? And then eyeballing like a range midpoint. Like I want it to stay within here so that if the market continues to look strong, I can establish a position with some sort of technical boundary. If it rips higher, then it rips higher. We'll have to deal with that later. But for those wondering about where my what my view on altcoins is, I still want to see some follow through from BTC, just to get the trap PTSD stuff out of mind, and then it's essentially, oi, sorry about that. It's essentially split into two sectors between new shiny stuff, which is quite NFT oriented as well, Lux, Ape, Stargate, whatever, and the good old familiarity longs of Sol, Luna, Avax, which are still good because there's no new narrative in altcoin world, so why not go to the stuff that worked in the past? And they seem to be performing well relative to other stuff as well, so the market likes that, you know? Does that make sense? Haven't allocated yet. Approach to getting back in without getting wrecked. Patience, as cringy as it sounds. Think about why you're entering, and if that reason doesn't also give you a clear invalidation, as in you can quite clearly point to an idea, a time, or a price or something which says, hey, your entry was probably wrong. If you haven't got that, then you very likely haven't got a setup. If you have got that, then you can afford the luxury of punting, because then you can define your risk. Thoughts on DeFi? Not interested. On the Sol Luna AVAX front, um, I think the setups are largely self-explanatory. Like, if we get strength continuing across Altland, for AVAX, it's the move back into this prior range between 80-ish and 110, 120, or thereabouts. You had a pump into the conference, but then the market was strong through the conference as well. So then you could easily make the case, just like similar to ETH, right? And you can also just use this cluster if you want to be really conservative. The basic idea is that you have support, resistance, breakdown, bearish retest, failed bearish retest, trading back within the range, and then your targets are the highs and then the range high as well. It's basically this shit, right? Fails, blah, 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 back within the range, and so you target mid-range and range high. Old reliable, right? And I think for AVAX, that would be mid-range, roughly where these highs form, and then range high up here, assuming this doesn't fully retrace, and it's at least there's some semblance of a setup here, right? Just a move back within the range, old reliable. For Luna, I mean, it's like a pure momentum thing at this point. I don't love like the market structure, like how price is moving isn't terribly helpful in that regard. Um, I mean, I could start drawing lines on this, right, and making stuff up. Like, oh, look, we've got a new key level of support. Yeah, I mean, I think that's okay, but I just don't love this in general. Not because it's not bullish, it's just because it looks weird. So bear that in mind. But there is obviously strong narrative stuff pushing here as well. And for Solana, on the upside at least, the two weekly levels is the big bearish retest boy is up at 135, and then there's a local range high at 115 or thereabouts. Um, so if you want to trade the shorter term range, I think it's fairly self-evidently between 90-ish and 115-ish on Sol right now, right? This. So the risk reward there isn't fantastic. I think if the market, again, if this altcoin strength sticks, there's a much more interesting trade on the higher time frame reclaim of 130, and then you can start to look for some pretty meaty moves back towards 200, etc. So this short-term consolidation is slightly less interesting to me. It's the weekly reclaim that would make it a very spicy type of setup. Craig, how do you get on a coin after initial pump? In the following ways. Am I missing anything? These are most of your options. Cred, how do you get on a coin after initial pump? So you either buy it if you know where you're wrong and the breakout is significant and the target makes for acceptable risk reward. Like if there's a very clear upside target to where that move takes it, and it's not just a pump, but it's a breakout of something significant, and you expect some sort of momentum continuation or other traders to step in, and the breakout like means something, then you just buy it, right? The second one, in like a lot of the Bitcoin scenarios we discussed, you either wait for the flash crash or low time frame retest of the breakout. The third is you buy the consolidation post breakout, which essentially be something like this, right? Like let's say you've got a level, resistance, market comes in, breaks it, right? And then you message me saying, Cred, how do you get on a coin after initial pump? And the market is just literally consolidating at this point. You buy within this consolidation on the assumption that you get something like this and not something like this, right? So doing business within the consolidation post breakout is definitely an option. And a lot of the time in these post breakout consolidation patterns, you'll get lower time frame patterns as well, right? So you get the market impulse, consolidate, and then it might run the low of the consolidation and then get back in. And at that point, fucking hell, this defines your risk, and your target is like another leg up. And you get some really juicy setups in those cases. But again, it's assuming that you've correctly identified a significant breakout, and B, the consolidation is tradable, or it just makes sense to buy. Obviously, if you're just buying pumps which have no technical significance and they're just irrelevant, then the chances that you get full retraced on or that you get owned are much higher. But if you're buying a breakout which means something, trading in the consolidation post breakout is often in crypto one of the better options. And then the fourth one is don't lol, just wait for new range or structure to form post pump. I think ETH embodies this like in probably the best way, right? Where it's like, where do I buy ETH? And then like, if you're not going to chase momentum, we know that 4K is a big level, and we know that 3K-ish is a big level as well. So why don't you just wait for it to like do something here, and then maybe you get like a nice setup at these lows or something along the way to let you in later once you've got more candlesticks to work with. Those are really your options. Am I missing anything? I guess buy it much later when it comes back to retest broken levels of resistance turned to support. Does that make sense? Is this helpful? I might be forgetting something, but it's a decent spot to start. So don't ape in with max lev to make up for the missed pump. I've done that before. Cred, when playing level to level, how do I know that this is the move? I don't know what that means. Could you rephrase your question? A lot of the time you don't. You don't know this is the move. You just have to make a bet, right? Okay. Thoughts on FTT? There's a decent area of resistance on the higher time frames to pay attention to. 55 monthly, weekly level. It's been ranging for absolutely fucking ages, so it's worth taking levels of resistance seriously. But good breakout, just like the rest of the market. 55-ish first trouble area. Thoughts on Atom? I don't think anything about Atom. Like, what do you want me to say? Look at this thing. This has just been an absolute grind. And a lot of other pairs are breaking out and reclaiming, like, weekly levels, etc. This hasn't done anything super straightforward yet. So no real thoughts on Atom. I think Duck was looking at Atom BTC, and he didn't like it. Why was that? I think there was some... I think he had, like, this? I don't remember. Maybe it was this. But, yeah, compared to some other stuff, it's just a lot less clear from a market structure point of view. So ETH has hit something. What is that something? Monthly. Oh, fine, okay. This monthly cluster top. I don't remember adding this level, but ETH has hit it, so clearly now it's going to zero. Because magic line that I forgot, make boing. And we know that monthly levels are supposed to be precise to the absolute cent. So the next move for ETH is to go at least back to the lows here. At around 0. This is like a level of resistance though. I might see some profit taking here. Especially if it pushes one more leg. What would be your invalidation while trading Breakout? Generally speaking, the Breakout structure / candle itself, right? So got your level. You've got market comes into it. Prints the breakout candle. Generally speaking, your soft stop or your mental stop is any weakness back at the level itself, because that reduces the probability of the breakout being good and or valid. A lot of the time, the hard stop goes either at the thrust candle low, depending on the time frame you're trading, or at the market structure low pre-breakout. Right? Breakout trading invalidation. Soft stop, weakness at breakout structure level itself. Hard stop, either at breakout candle low, depends how it looks, and or at market structure low before breakout. Generally, any weakness post breakout ought to be treated with utmost suspicion, because a true failed breakout won't give you much time to exit if you're wrong, i.e. you'll literally buy the top. There you go, there's breakout trading invalidation. Soft stop, which is to say where the idea starts to become inaccurate, or maybe you don't like it anymore, is weakness at the breakout structural level itself. In that case, in this example, that'll be obviously the level, which is where the breakout is taking place. The hard stop, which is either at the breakout candle low or at the market structure low before the breakout leg takes place. In general, if you're breakout trading, it's like depends on the market regime. Like if you try to breakout trade in a range, you're wrong immediately, you get shafted immediately, right? It's very rough. It's like the worst setup to trade in that environment. But if the market's up only, breakout trading is like a very good way to trade because it's quick and you get a clear invalidation. So that is to say, if you get any, generally speaking, if you get any weakness post breakout, you should be suspicious of it and wary of it. Because if you get a true failed breakout, you end up more or less buying the wick before getting fully retraced. So just worth bearing in mind. And it also works the other way around, right? You can start to infer about what type of market regime you're in by looking at what breakouts are doing. So if your breakouts all look like what we were used to, last year, essentially, where you get a breakout, it does this, maybe it moves down like a tick, and then it just teleports, you're in a very strong uptrend, right? Whereas if you have breakouts that have been doing what we saw in the last quarter, where any type of move up gets fully retraced, that type of behavior in itself informs you as to market conditions, right? And the same applies to breakdowns and just attempts to move out of a range in general. Besides MAs and levels, what could I add for better confidence for taking trades as a beginner? I think if you have confidence issues taking trades as a beginner, you need less stuff to work with, not more. I would literally just start with weekly and daily, very obvious levels of market structure, and go from there as your areas to do business, and just trade more in general as well. But I don't think it's a case of adding more stuff. It's probably removing stuff, if anything, and honing in on a couple of setups or trade identification tools. Craig, your clean double close video is good for this? Yes, I agree. I can't believe the market's gone to zero. So obviously, while I was doing that explanation, I shorted 10 zillion contracts at the Pico top with my other hand, because I'm an amazing multitasker. So I'm up 10 million, 9 million, 9.5 million. So basically, I'm never coming back to this channel again. I don't need it. This was my big trade, the big short. I've just closed, which is why the market is bouncing. But I hope you enjoyed Technical Roundup. I have no reason for a YouTube channel anymore. That's it. I'm just gonna travel around the world on luxury cruises or whatever dead economist rich people do. So nice knowing all of you. Don't say I didn't warn you. That's a joke, obviously. Is that what Don's doing? No, I don't think Don's selling this. Was that the intraday dip? Mate, no. Did the S&P fart? A little bit. Could you please explain how you identify supply and demand zones? Look, all of this stuff is very, very, very similar. Support resistance, range levels, order blocks, supply demand, etc. Like it's looking at highs and lows and inflection points in the market, or areas from which very fast moves originated, and highlighting those same areas, be it with a line, with a box, or any other type of shape. So I think any decent range and or support resistance tutorial will tell you how to identify supply and demand zones. It ultimately doesn't really matter all too much. Like, it's very unlikely you find edge purely in levels identification. It's much more the execution and trade management and risk management, asset selection, all this type of stuff that's going to grant you edge more so than, oh, well, I watched a YouTube video. I figured out that this is the correct rectangle to draw, and it's not this one, so therefore I'm profitable now. You know, that's very unlikely going to be the case. Like, it's all the same. It's 98% of it is all the same stuff, which lands you in the same place. Can we look at the lower time frames? How does the 2-year look? Yeah. Chris Rock or Will Smith? I don't watch WWE, sorry. One final thing to note before I jump off is that bear in mind there are still a lot of weird shit going on in the world. Fed tapering, war, inflation, stuff spilling over to commodities. The S&P looking like approaching some sort of retest levels and whatever else. Like, all the stuff that was driving the market lower consecutively for weeks, if not months. You could take a very charitable interpretation that it's all been priced in and it's fine now and we can go up forever, or it's just our attention spans are absolutely garbage, and those things haven't like fully changed or gone away. It's just we've chosen to focus on other stuff. So one thing to look out for, next week, is if we start getting more headlines and more S&P spillover, whatever it may be, just be cognizant of how the market reacts. Ideally, what you want to see, and it's not just the news itself that matters, more important is how the market reacts to news. The best case scenario for that would be that we get the same shit that nuked us weeks ago, except the market is actually able and willing to absorb it for a change, right? So instead of bad news leading us to full retrace and getting weekly ugly candles like this, you might get a bit of a pop down on lower time frames, but ultimately it's bought up and the bigger picture doesn't change. That would be good. That would be positive. But just bear in mind that in general, because we're all dopamine 24/7 crypto addicts, our attention spans are really short, and there very well could be a kind of snap back to reality thing, given the state of the world is still rubbish. And if that happens, and if you get the negative headlines, it's not the headlines themselves that matter. You want to see some resiliency in the market, and investors and traders and speculators being able to stomach those headlines, as opposed to just bailing on all their positions the second, weird stuff happens. Okay? I think that's all I've got. And again, not feeling 100%, so I do appreciate you sticking around for the hour. Like the video if you haven't already. The TLDR version is breakout good, momentum good, failed breakout bad. If bad stuff happens, you want the market to be able to absorb it. If fake out stuff happens at 43, 47, 43, 48ish, just be wary of what that looks like. That's really most of it. Also, go to trletter.com because our newsletter comes out tomorrow, as always. That will have some commentary and charts and all the other stuff without the rambling, so go check that out. As always, thank you to FTX for supporting Technical Roundup. Go get that mobile trading app. There's still maybe a few green candles you can get your family members into before the market pulls back. And why not make the most of it? Best mobile trading app on the market. And with one swipe, you can capitulate into stablecoins at the bottom before the new trend starts. Because we've all done that before. Yeah, that's it. Take care. Thanks for listening. Videos, live streams, market updates. We'll be spamming you this week with content, given we're at quite an important point. And have a great week. Bye-bye.